We are live with JP McDonald, who's an accountant, so he has all the smart answers, and Nick and I get to ask the questions about why we pay taxes.
He's an accountant. That means he's boring.
Yep.
Automatically.
No, JP's a rare, I think a rare accountant. He doesn't.
Why are other accountants boring? Because I was just thinking how many people I offended that are listening.
Most accountants there's multiple accountants here at Rockstar. I think most accountants have a very unique way of breaking down numbers. I think accountants and engineers, so there we can just alienate everyone. I think accountants and engineers are just very logical when it comes to investing. They're just looking at the numbers, which, as I say that, seems
process driven.
ridiculous.
Are you process driven?
No,
you're not. But aren't most?
I think he's not like a regular accountant.
That's one of the best comments I have. Most people say,
but don't you think that about coming?
I'm not an accountant. I mean, I should have been in construction. I just stumbled into accounting, and
you still can be.
What?
Oh yeah. So Andrea tells me that all the time.
How did you stumble into accounting?
I went to university. I went to college and university to play volleyball, and I had to do schooling. So I did business and ended up doing accounting.
Exam really hard? No, I know multiple people.
I didn't go to class at all. So,
but then at the end, you have to take that. What's the name? There's a course.
I don't know. Back then, it was a CU fee, or now it's something else.
Okay, but multiple people fail that multiple times.
Yeah,
and then after a certain amount of times, if you fail it, then you can't even do it anymore. Correct?
Something like that.
And you passed it on your first time.
There's 3. One of them I failed, and then the other ones I just went through.
And so you're always good at math?
No, we used to play a game. I do it with my daughters now. In grade 3, my teacher would make me stand up, and 2 people would stand up, and she would say 7 times 3. And I didn't know this, and I was getting killed. And then I went home in grade 3, I learned how to count by numbers. And from there, it was just different. And then that was like life-changing for me for understanding numbers. And then business math, grade 11. That route was, once I learned about interest in high school, it was like, get me out of the advanced classes and going into the general route. That was...
So multiplication tables to begin with.
That was, yeah.
Which I don't even know if they teach anymore, but that's funny you say that, because I always feel like I had a teacher that drilled that into me. And even now it kind of sticks with me. Like I know 7 times 3 is 28.
Yeah, close.
So it's always just kind of stuck with me.
You're testing me, right?
That would have been good. That would have been good.
I know. Yeah. So I feel like I've always benefited from that, because when you're just doing calculations, even about properties and stuff, when you have some basic math in your head, when you're just looking at the return on investment or just a cash flow number or a multiple of a cash flow number, I don't know. You don't
even think. It just comes
it's like
your
a
head.
quick thing. It's like you move on to the next decision because you see the
completely
thing. And I always maybe took that for granted.
Yeah. It's called mental math. My kids are going through it right now at school.
Oh, is that what it's called now?
Yeah, they teach them different strategies for mental math, because I'm like, no, you don't do it like that. Here's the mental math I do. They're like, no, our teacher's not teaching us that way. And they teach different strategies. I'm like, I don't care. Just figure out the number.
Yeah, I remember when when Aiden got to grade 11, I forget the way they're teaching division now is totally different way than I did division.
Yeah.
So I couldn't even understand it. I had to relearn it. And then once I relearned it, I'm like, oh, okay, this kind of like works, but I like my way.
I agree. Yeah.
So I had to look
up to 2, carry 3. Yeah. That
I couldn't understand.
The way we did it was way different. It
just seemed very logical to me.
Yeah.
Shit, maybe I'm logical.
I had to look up long division on YouTube. Was this last 2 years ago?
Yeah.
Because Alec came home, and she came home with like long division homework, and I'm like, I totally forgot how to do it. So I had to go to YouTube and watch the video.
They changed it. They changed it from the way that we learned.
Oh, is that what it was?
So I had to relearn it as well.
Yeah. And you know what? There's an app now. I wish I knew the name of the app, where Aiden or Sienna were showing me. They take a picture of the math problem, and the app will give them the answer, but show them the steps to solve the problem.
You showed that to me. You or Sienna showed that to me.
Okay, I was blown away. I'm like, cool. Oh my God, you just take a picture of the question and it shows you how to do it. So anyway, school's a mess. I remember just going through grade 11. My son's, I think it was grade 10 or 11, his math teacher bailed. So they had to put the careers teacher into math, and this careers teacher didn't understand math. So I had to basically step in. Yeah. And then I think when you got to grade 11 or grade 12, when it started to get back into calculus, and I took calculus, but it was just beyond me. I'm like, Aiden, actually, we need to get someone else to talk to you now because I don't have 6 hours to relearn calculus here.
Yep.
This is sad because I took calculus in university. So that's
I never did.
Yeah, that's where
my closest was stats.
Which stats was really good.
Stats was so
amazing.
interesting. Yeah.
Stats was like one of the best university classes I ever took.
Exactly.
I remember we were figuring out the lottery and, just the odds and percentages of winning the lottery. And that made me never want to buy a lottery ticket for the rest of my life. I'm like, this is impossible.
Yeah.
I will just save my money.
Yeah. I played poker against you. You're not really good at it.
Yeah. No, actually that one time with those guys, I won't say their names. But I actually won, but I needed the cheat card.
Oh yeah. Yeah.
I needed the card to know the hands of poker because I don't know the hands dude, give me 6 months with poker and then let's talk.
Okay.
Don't give me 6 games in my life.
Okay.
All right.
I'm a good poker player for 30 minutes. Then I'm all in.
You're bored?
Here. Here, all in. Let's go. Let's see what happens.
Yeah.
I'm calling this guy.
Yeah. Fair enough.
So you got into accounting and I want to talk to you about some real estate stuff. So the top things, if someone comes to you as a new real estate investor, what are the things that you like most about the tax efficiencies or however you would describe them when it comes to somebody owning real estate that's not their primary place of residence?
Right.
What are 2 or 3 things?
I go incorporation right away. You do? We learned that.
Even on one property?
Yeah, we learned that. The problem is when you're, use ourselves as examples. When we first start, we don't have money, so we don't want to incorporate. We don't want to spend money on anything. But I learned very quick that, okay, now I have a full-time job and I have properties and I'm selling these properties and they're on me personally. And now my tax rate jumps through the roof because everything's on me personally when I'm selling properties. So getting them into corporations up front, yes, when you do sell, you're going to pay high tax, but I can elect to take money back from that corporation anytime and start getting my refunds in the corporation. So that was me right away saying, don't incorporate because I didn't want to pay and I didn't fully understand it.
But if you just have one property, I guess just to push this back on this 1 second, because I'm interested in your opinion. If you have one property and it's a student rental you're buying or a duplex and it earns a little bit of cash flow and you have a career that's paying, let's say, slightly above average income in Canada,
right.
The only addition to your income tax in that situation is the income generated from any cash flow on that property.
Right.
So it's not a huge burden.
How old are you?
Let's say I'm in my 20s.
Well, that's exactly.
That's you're saying the problem?
Yeah, you can't predict. So someone who's 20 who has a good full-time job and goes and buys a property, that's a mover and shaker. They're going to be moving forward.
So when you
I'm
project
not planning
that person forward.
Yeah, I'm not planning for failure at that game.
I see what you're saying. So you're saying that person's going to be rather financially successful if you were to bet on them. So by the time they're 30 or 40 or 50, their income's going to be pretty high and they're going to have this property stuck with their personal lives.
Right.
And if they sell it, now they're super high income because they're declaring the sale of that property. Now they have a lot of tax burden to deal with.
Which they're going to have regardless. Remember, the corporation pays high tax. So it's just, I'll always have a refund available in that corporation. If I say, you know what, I don't want to work this year, then I can start pulling from the company to take money out and effectively drop my interest.
Okay, so I want to take a year off of work. I'm switching between jobs. Okay, now take some income out of the corporation that has my real estate property or properties.
Right.
And my income personally is low. So whatever I pull out of the corp structure isn't taxed at a high rate.
Right.
Yeah.
And then you always look at the risk component as well. I mean, someone who's 20, when we all started, we had nothing. In our 30s, we started to acquire.
Civic.
Exactly.
I had my Honda Civic.
By the time you're 40, then you have net worth. Do you want all of these under you personally? I didn't. That's why we liquidated and we started buying everything in corporations because we didn't want those individual risks on us. I don't want to lose my business because of a rental property.
So then to move it in late. Oh,
yeah, I was just going to say, you can sell it to the corporation though. I know you have to pay, like if you do it later, you got to pay land transfer tax.
You got to either sell it.
And fair market value. So you'll have to, you can only sell at fair market value. So you'll have to pay capital gains to sell it into the corp.
Well, you got to either sell it or you can roll it into a corporation.
At fair market value.
At fair market value. But the accountants and lawyers do that. Either way, if it's a place in Toronto and it's $1 million roll, you got, what, 60 grand in property tax? So
And possible capital gains, no?
no, because you can defer the capital gains
You can defer the capital gains
on a roll. Yes.
Oh, you can?
Yes.
When do I ultimately have to pay that capital?
When you sell it.
Oh,
Yeah.
okay.
So you can defer it through a
I think I was aware
rollover.
of that.
Just the accountants and lawyers got to do it. It's a, you pay $5,000 to the accountants and lawyers to get it in.
And I know you're not a banker, and I won't hold you to anything here specifically, but have you ever seen a bank push back on that because the title has changed, because the mortgage came to the person personally? I guess they could call the mortgage due.
Yeah, the banks are just archaic. I mean,
Yeah.
I still don't understand the Canadian banking system.
Yes.
I'll never forget.
Right. We're all in the same boat.
You know what I mean?
Well, we renewed a mortgage.
Does anyone like the banks?
But we renewed a mortgage. I was in the one of the big 5 banks in the branch signing the documents because they brought me in for the renewal. After we had signed everything, we're going through it. This was one that we have personally, Diane and I have, and so after we signed everything, they're looking. He's going through, he's flipping through. He's like, oh. He goes, this is owned by a corporation now. Well, yeah. And he goes, oh, why'd you do that? I forget what he said, liability or taxes. I forget what he said, but he spat out an answer.
Okay.
And I was like, yeah, okay, sure. I just agreed with him. He's like, okay. So the fact that the mortgage was still in our names, yep. And then it was owned by a corp, because this was our old principal residence that we lived in.
Right. And
then we transferred to the corp after we moved out and all this stuff. They just didn't care at all.
Yeah, I guess by the letter of that person, probably somewhere in the bank, I'm sure there's some rule where they maybe should care. But like you're saying, they're so archaic with their systems, nobody really knows what's going on. It's part of the frustration just dealing with banks that you never know the black and white answer really on anything. Everything, it's almost like you're going to court. Anything is a suggestion, and they'll always have a slightly different answer.
Yeah, you qualify for the mortgage, the bank qualifies you. Just sign a joint and several. Look, we're signing on behalf of the corporation. I don't understand. They're 50 years behind on this.
Mm-hmm.
So,
got it. And sorry, what's a joint and several?
You just you're guaranteeing the loan personally.
Yeah, got it.
They don't like new corporations being formed.
Yeah.
Sure.
I thought I used to say when I was signing that way that I was signing not on behalf. Was it joint and several? I thought you signed and then you said something fancy, and I remember thinking I was so cool that it was like joint and
on an offer you would say ASO, so authorized signing officer.
Was it that?
On an offer?
Yeah, okay. I remember thinking, it's not really me signing. I'm signing on behalf of my corp over here.
Yeah.
Anyway, okay. So you like the corporate structure, but there's costs with the corporate structure. You have to. How many corps do you just set up one corp, or is it now we're getting too advanced?
I stick with one. I mean. There's too many corporations. People don't like accounting. They don't like tax. They don't like mess. When you start to have, I think between Andrew and I, we have about 12 corporations.
I thought you said you didn't like corporations.
I know.
I didn't like a mess.
I don't like corporations are a mess. By the way, I have 12.
Yeah. It's very, very confusing.
Yes.
So for the average person.
Do you have bank accounts for all these corps?
Yes. It's a mess. So, but we like to separate all of our risks.
Got it.
I don't want to lose my office space because a tenant. So,
so you're putting one property in?
No, I go kind of wherever.
Okay. Whatever makes sense.
Exactly.
So you could have multiple single family homes in a corporation.
Yep.
But maybe a small building is a corp by itself.
Exactly.
Okay. So use corporations and
you base that off liability amount, I would imagine. Is that right?
I explain it I just educate my clients and they make the decision. I just say, this is my train of thought.
Yeah. And for your train of thought, you guys were basing it off the amount of liability. I would imagine that property could potentially encounter.
There is another, okay. And I agree with this largely. I guess I would just push back on this thinking and interested in your take on just get a lot of insurance.
100%. You can, but will it cover?
Yeah. Talk to your lawyer about all the possible scenarios you think you might ever see, and see if that's enough insurance.
Yeah, if you have a few single family rentals, you probably lump of whatever number
you're right. If you have a building, if you have commercial space, it all changes.
If you have a 20 unit building and something drastic were to happen.
5 20 unit buildings.
Yeah.
Right.
Okay. So use corporations. You're ultimately going to pay roughly the same tax burden, personal or corp.
No, you could actually pay more. So someone who's starting out, who's making 70 grand, they might be in the high 20s average tax rate.
Mm-hmm. So 70 grand as a salary.
As a salary. Yeah. So, if they go and make income in the corporation, they're going to pay 52% tax. They're going to pay a high tax.
Because that's passive business income.
Exactly.
It's 51 point something, 52?
Right.
Okay.
So what we do is
that isn't obscene.
Once we give them a dividend out of the company, though, the company brings the effective tax rate down to like 26%. So it's effectively you own this property personally once we give you a dividend.
That's how it works from a tax perspective.
Exactly. So that's what I'm saying. If you're on the flip side, let's say you are making over $125,000, dollar for dollar, what you're making is taxed at highest tax rate. In the corporation, we want stuff trapped in there. You're paying high tax in there, but we have a refund coming in there. Whenever we pay a dividend out, we're getting a refund.
That's what the dividend you're considering the refund, or the fact
there's a refundable dividend tax.
The fact that you did the dividend means there's a refund to the corp.
There will be once I do a dividend.
Yes.
So I'm paying high tax in that corporation. In 10 years, I pay a dividend when I've retired. Then I start getting refunds in my corporation.
10 years, Tom. What's the value of those refunds when you get some 10 years from now?
And fiat dollar bullshit. Fucking Christ.
It's either pay it now and it's fully gone, or you have a refund coming. So
this is sounding like some RRSP.
I can.
some RRSP.
Whenever it's
put your money inside an RRSP and defer taxes. Great. So when I retire and taxes are much higher, and the dollar is worth less.
RSPs make sense though. They
oh God.
I don't.
You're hurting my soul.
I don't like RSPs. I never have, but
if you're going to defer taxes and have the government control your finances, then if you like people to control your life and your finances, then RRSPs make a lot of sense.
Right.
For somebody like me who doesn't want the government to fucking touch anything that I've done through my time and labor, RRSPs don't.
You know what? I'd be interesting.
I really just don't like them.
But you're making a 50%. You're making a huge refund up front.
Sure. What's the opportunity cost of that refund? Because the fact, okay, great. I'm with you. And sorry, I like what you're saying. I'm not trying to.
No, I know.
I just mean, great. I made this big tax advantaged move by not paying tax now through an RRSP, but I've just deferred it.
Right.
What am I going to pay in the future? Can anyone tell me?
Right.
I'm curious.
Then the value of those dollars, based that I have to trap those dollars inside an RRSP where I can't invest in property. I can't really invest in a good Bitcoin thing. I can invest in a fund, but I don't really have it. So my dollars, what happens if they're debased through M2 growth to fucking shit?
Right.
And then by the time I take them out in the future, I'll still have to pay some tax, probably higher based on the debt burden that exists today. And the dollars are worth less. Just give me my money now. Let me take the fucking punishment right now. Let me suffer today.
Right.
Give me what's left as mine, and then I will make it work.
But any financial planner will tell you, look, you're going to make 30-40% refund right now. Compound that with 6%. Manage your own portfolio.
So you'll outpace any M2 debasement because you're not paying the tax. Sure.
So
there's an argument there. I don't agree with it, but I can see the mathematical logic. 3 times 7 is 28. I can see the mathematical logic. I get it.
Good memory.
I get it.
I think the problem is the taxes. That's what makes us all. We should just we should fix the problem at the beginning. The problem is the taxes at the beginning.
You don't pay the tax. It's logical. Like you don't pay the tax. So you're already ahead that much money.
Well, look,
and let it compound. That should outpace any debasement. I just don't like having. Listen, when we started this business, I had to sell RRSPs to fund this thing. And I'll never forget calling and I said, hey, can I sell 10,000 of my RRSPs? I think it was RBC. And they're like, no problem. We're going to withhold this much tax. And I'm whoa. No. I said, I do my taxes. I will decide how much the government gets. They're like, no, this is how it works. And then I said, well, how do I get to pay less tax now? And like, well, take out 5,000. I don't know if this is still the rule. That was like the minimum. So every day I would call in for like a couple weeks, not every day because I didn't have that much money, but like every couple of days for a few weeks, I would call in and say, can I please take out 5,000? Because I think they only withheld 20%.
Right.
And that's the moment I decided this isn't even my money. I have to beg the government for my own money. And it just disturbed me in my soul. Yeah. And I can't do it anymore. I don't have a single dollar of RRSPs
anymore.
No,
I did it last year for the first time. So I'm the same. We're so heavy in real estate.
You just told me how great it was, and now you don't have any.
I don't have a choice.
This is a 3 times 7 equals 28 conversation.
If I want to save money, I don't want to give government all my tax money. In some situations,
you'll give it to them later.
Yeah.
Okay, but you did it now just because of your income situation.
Yeah, and we're not talking huge money. We're talking 25 grand here and there.
Way to walk that back.
But it's a $12,000 refund right away.
Yeah.
Right. So that's do I lose my 12 grand or do I?
Yeah. No, I can argue that both ways. And I know my way, logically and mathematically, people would just say this guy doesn't make any sense. To me,
I understand
I make perfect sense to my own logic.
Yeah.
A friend of mine that's in kind of investments, he was like, I don't understand. You don't have RESPs for the kids. I'm like, no. He's like, yeah, but the government will match. They'll give you, what is it, $5,000 a year maximum?
$500.
$500?
Yeah.
Oh, for a certain amount,
up to $5,000 maybe?
Yeah. Up to
is it really just a maximum of $500?
A year? They'll do it, I think, 7 or 8 times. It might have grown now, but
$500 is decent.
Yeah, but I was just like, but then the money's locked in to whatever it is. And then I know it grows tax free, but then it's like, but then they control it. And what if my kids don't?
No, you can open it through Quest Trade, put it in, they'll match, they'll give you your $500, put your $2,500 in. Government gives you $500.
Yeah, but then
go put it into a Bitcoin ETF.
Yeah, but for me,
that's about the best you could do.
But for me to take it out,
no, it's not. I did the same thing, and my Bitcoin went in half.
So did you sell it?
My RESP went in half. So,
did you sell the Bitcoin?
No.
Well, your Bitcoin hasn't done anything then. Your Bitcoin's protecting your purchasing power. Bitcoin.
Trust me, I look at it and I'm like,
it's Bitcoin now.
It's protecting you from purchasing more stuff, so you don't spend it. So by cutting the value in half, it actually helps you. See,
Bitcoin's at all-time highs in all these bullshit currencies. Canada's on the list. It's at all-time high, I think, in the Nigerian currency, the Turkish lira, the Egyptian pound.
Share what you were looking at the other day. Hold on, let me finish. Well, I want to come back to that for a second, but no, about the Canadian currency and the Bitcoin price.
Yeah.
But just to wrap this up with the RESP, the one thing I don't like about it is that it's always just these approved institutions, these approved, what if my kid wants to do something else and I want that money to fund, they want to start a business and I want to fund it. Well, then I'm just going to be paying taxes and all that afterwards at that rate later. I'm like, I'm just going to control the money now. For the extra $500, I can use TFSA room, whatever else I want, if I want sheltered growth or do anything else.
We sound so ridiculous. I mean, JP is a rare accountant in that he sees both sides, because I don't think most accountants, to your credit, I don't think most would see both sides, but just listening to me and you, Nick, would just sound like...
No, but for $500...
We bought a house. We bought a place for Brooke and Elise for their education.
Yeah.
That's what we did too when I was in my 20s.
That's why we did it. Yeah. Andrew said it. So we said,
and now the property price have gone so much further.
So, okay, you can blame him for the Bitcoin, but then you got to give him credit for the house.
Yeah, I know.
Yeah.
No, because we didn't even have to refinance that house. Like to your point, I guess our finances have changed, and I always bought that property. That property went up so much in value, even only with 50% ownership with Nick, it would pay for both my kids' education.
Right.
And mine.
And Nick's, one property. Mm-hmm. But bought in our 20s, to be fair. So enough, quite a bit of time passed.
Yeah, generations.
Oh, fuck.
But hold on, share about the currency, because this is important, actually.
What do I want to share and not share here?
Well, no,
you're talking about the Bitcoin price?
Well, the Bitcoin price in Canadian dollars.
Yeah, okay, so yesterday we had a big realization, because yesterday the Bitcoin price came to about
35.
To about half of the all-time high. Yeah. And a bunch of us in the office and a couple people who own Bitcoin not here called me, and we were having this discussion. We're like, holy shit, if Bitcoin goes back to the US dollar all-time high, which is it's still a double from here. So let's call that a far way away. But if it does, in Canadian dollars, they were doing the math because they were looking at the Canadian dollar balance at the halfway mark. And they're like, I'll be up between 15 and 20% versus the last time it was at that high.
Because the Canadian dollar's dropped.
Yeah. Because the Canadian dollar is shooting the bed. And this was a business owner that was talking to me about this. They were in shock. It's like, holy fuck. And we were all having that realization in the office yesterday, like the Canadian dollar versus the US dollar. It made us have a currency conversation. Mm-hmm. We're like, holy shit, the Canadian dollar versus the US dollar isn't really doing that great.
No.
So this is serving, and I know the price is down. I'm not trying to justify anything in that regard, but if it ever does go back to that price, you're actually not just back at your Canadian dollar all-time high.
Right.
You're likely 15 to 20% ahead.
Right. Do you think they will? Because I've invested in it, I've pulled money from it. I don't even know what I want to do with Bitcoin anymore because I lost so much in it.
You want to love it. That's what you want to do.
Seriously, do you think the institutions will allow this? The world is run by the banks and by these
BlackRock.
No, but BlackRock is different. I mean, they're trying to get this going.
Yeah, but I mean, there's going to be an argument made saying they want to control it. But
they want to make
without a doubt, yes.
But finish what your thought is there.
Are the banks, are the governments going to allow this to come through? My gamble is no. Mm-hmm. That's where I truly am now. I think that
there's one we should probably have Greg Foss back on here to talk about the futures market.
Yeah.
The only way, I guess there's two ways I currently see how Bitcoin could be thwarted by the banking system or government institutions. I guess there's several ways. Maybe we should talk about them. One way is I don't fully understand these naked shorts and the futures market and how much pressure that can put on a spot Bitcoin price. From my current understanding that once these spot Bitcoin ETFs come into existence, there'll be enough liquidity at the spot price that the futures market will have a little bit less control. Right. But there is this dynamic between the futures market and the spot price that I don't fully understand that makes me a little bit just wanting to know more. So there is some dynamic there that I don't like. The other argument that could be made for institutions thwarting Bitcoin would be that someone like BlackRock, who might have nefarious intentions, tries to accumulate so much Bitcoin that they really try to fork this thing and control Bitcoin because they have so much under their own umbrella.
Right.
The argument against that's pretty clear, that the nodes, like there's a Bitcoin node sitting right here, the node operators are so distributed and decentralized that they wouldn't let BlackRock do that.
Right.
So that argument to me is really not a huge threat, that they would get so much control of Bitcoin under their umbrella that they could actually dictate the future of Bitcoin. My limited technical understanding of that says no, because node operators like myself will be like, fuck you, we are not going along with your plans. And that's a real beauty of Bitcoin. The other threat to me would be the government say, hey, JP, if you have any Bitcoin that's not on an exchange, you better fucking put it back on an exchange, because we're going to say it's illegal to hold Bitcoin off an exchange. And then once it's on an exchange, they can tax the shit out of it.
Which is what they're doing. That's
which it looks like
the only way they're going to get it.
Yeah, it looks like that could be the angle. But I guess in a retaliation to that, I like having some Bitcoin off the exchange to then, if that ever came to fruition, I have options. Mm-hmm. I can say, do I want to put it back on, or what are the ramifications if I don't? Is it like some tax? I at least have a decision opportunity there. Whereas if I have it on the exchange, I have no decision opportunity. My thinking is that they're not going to be able to control this, and that Bitcoin just lives outside the system to such a degree that the American or Western financial institutions don't have as much control over this as they think they may.
Right. But they do have control over it now, because they are controlling it, because they are disallowing it right now.
What are they disallowing?
In what regard?
The SEC is not allowed this to come through.
Oh, the ETF.
This is
but that to me is
U.S. government.
That to me is every sovereign individual's opportunity to buy some now and front run these fuckers.
Right. Well, why isn't the Reserve buying this?
Who's the Reserve?
Federal.
Oh fuck! Thank God they're not buying this shit.
Right.
Yeah, I never want them to buy Bitcoin.
But why not? Why they're going to go buy gold and they're going to back? Why aren't they buying Bitcoin?
Well, why? The same question would apply to gold. Why aren't they buying gold? Because they're not buying gold, but other countries are buying gold.
Right.
But the Fed sits on so much fucking gold already.
They sit on a bunch.
They are their majority owner globally.
Yeah, but the other ones are catching up, and if you combine the other ones, they're now.
Yeah, I just think they have a shit ton, so they don't really need to buy anymore.
Mm-hmm.
But Bitcoin, maybe they're buying it. We don't know.
Well, why did Canada sell theirs?
Oh God, fuck, I don't know.
Do you know that?
Canada, I think we do have 72 ounces or 67 ounces.
Canada sold all their gold. This was what year now? It was a while ago now.
Yeah, it was under Trudeau's watch. Not that he was to blame for this, because let's face it, any prime minister.
They sold it all. The rest of the world, other central banks are buying it. Canada sold theirs. We have nothing.
I think in the UK, one guy in the early 2000s or so, George, whatever his name was, the UK prime minister, he sold all of theirs too. I just think they get the tap. To me, the reason Canada sold their gold is they get the tap from the Federal Reserve, who controls everything, to talk to the Bank of Canada, who basically influences the government, which I know is never supposed to be discussed, and says, hey, you know what, we need to keep the gold price down. Fucking throw some of yours on the market. We're not going to sell ours, but Canada, you do yours. You do our bidding for you. Why else would Canada sell its gold? Why would you sell an asset? It doesn't make any sense. Anyway, we're
to balance the books.
Oh God.
Well, we sell all sorts of stuff to China, so I mean, that's a whole.
But I guess to your point, I can see where you're coming from, and I think that is probably the mainstream thinking for anyone who's getting into Bitcoin. I just think that how are you going to stop something where you have people in South America who are looking at it, when you have people in Nigeria and Kenya looking at it, when you have people like in El Salvador looking at it,
it feels like
have people all over the world who are outside the grasp of the IRS or the US influence. I think it's too far gone.
Yeah, it feels like the probability of that, to go back how, always Greg talks about probabilities, and it's like, it feels like the probability of that has gone down a lot in the last few years, at least since, because I'm always playing devil's advocate too. And I look at that and I was like, okay, let me play this out of my head. But it just feels like from where, it started to this point, that probability has gone down a lot, because they would have done it early. They would have acted in a different way earlier. They can still try to go like really heavy-handed approach now, but it just feels like it's too far gone, because there's just so many other options, and adoption is picking up by more and more countries in different places. And it just feels like, and then there's also a financial incentive for them too, because if, look, the world's run by money, and a lot of crooked money and dirty business. And there's a lot of shit that happens around the world that's financially driven, that's like terrible stuff. And now that if they look at this as an opportunity, so a company like BlackRock that's involved in so much, it's like, hey, if we kind of get this thing up and running, how much money can we make
without
by being this? And then, so then what's the policy pressure being put on because of that? Because now it looks like, I don't know how much you follow this stuff, but the SEC didn't appeal the grayscale ruling, right? So it looks like basically the ETFs are pretty much going to be approved, sometime next year. I mean, anything can happen.
Well, that's why it jumped, right?
Your angle is saying that maybe that's all a bad thing.
No.
Oh, okay.
Yeah, I mean, BlackRock.
That's not why it jumped. That the SEC not appealing was actually a few weeks ago before it jumped.
Right.
Oh, you're talking about this little pump that just happened in the last few days?
Yeah.
Okay, got it. Yeah, I don't know if anybody really knows why that price jump happened, but yeah, I see what you're saying. The word's leaking out that this is coming, price starts to move.
Yeah.
But your biggest threat then, just trying to understand your thinking, is that it'll be controlled by governments. So kind of party's over, game's over, upside is over.
Yeah, and I mean, Bitcoin is not good for paper money, right?
It's not good for anyone that tries to, that's
the simplest way. It's not good for paper money.
It's not good for credit-based debt money.
This changes control for the way the governments operate.
Yeah, and they're going to try to hang on.
With that line of thinking, JP, I agree. It's a major fucking threat to the money printer that they have. And because of that, everything's on the table.
So, and I don't see them, the powers that be, I don't see them giving up their power. Why would they give up their power?
They're going to fight for it for sure.
So I see this,
and I'm here.
I see this 5-10 years.
Yeah,
you're going to write it out.
I'm here for the show.
90. Bitcoin's at 100,000.
I told you.
That's interesting that you say. It's interesting because this is, I think, a good train of thought, because a lot of people are having this thought. It's not so much that the Bitcoin dollar price of Bitcoin isn't really what I'm thinking about. It's that if you look at the credit-based money system that we have now, they have to inflate this so much that it's not really Bitcoin for me that's going to change. It's the amount of fiat dollars in the system. So like if Bitcoin's only at $100,000 by the time I'm 90, that would actually mean that they got their fiscal house in order, which I think is impossible. So to me, it's like, it's almost like
it's going to be at 10 million.
It's honestly a bet. I know this is weird, but it's honestly a bet more on the stupidity of the debt-based credit money system, and me just looking at it going, these guys are stupid. They're never going to stop spending. So my purchasing power in this thing called Bitcoin is likely going to go up. What dollar price is next to it, literally have no idea.
Right. And Bitcoin's been diversifying, right? A lot of whales have left because the price has been pretty consistent for the last year. So my understanding is, if
up by 100% means pretty consistent, then you're right.
Well, sorry, but it went down by 400%. So
there we go.
It's 28.
Sure. Yeah, you're right. Yeah.
So it's been pretty consistent since its last major drop.
Sure. Yes.
The number of wallets, the number of wallets on the network keeps growing.
Right.
Yeah.
So, okay. But
at a slower pace now, because always during these times, it's not the sexy thing. And then when their price starts moving, then everyone's like, oh my God, I should jump in. And then you get that FOMO, and then you get that final pump before it comes back down.
The one thing, and I didn't expect us to talk about Bitcoin as much, but I'm happy we are. Yeah. The one thing that I haven't read this yet, but I have it printed out, is that these guys, River, put out a new report saying the Lightning Network grew by 1,212% in 2 years.
Oh, cool.
And this is the kind of stuff that I'm interested in because it reminds me of my tech days. Like in the late 1990s, everybody was buying tech stocks. It was like pets.com. And I'll never forget, a guy convinced me to get into millionaire.com. I don't even know if it went public, but they were like, you better buy millionaire.com because that's where all the millionaires are going to go. And I'm like, oh my God, I better buy some of that stock. I know that was the full sales pitch, right? So there was this madness in the late 90s. And then the tech bubble burst in 2000, 2001. And, my Oracle stock went from, I'll never forget, like $85 a share all the way down to $16. And I just watched it go down, like all the way down. So like, I'm very experienced in volatile rides here, JP. So I watched it go all the way down, and then nobody would talk tech for like 5 years.
Right.
Everybody thought tech was bullshit. The ship had sailed. Pets.com Super Bowl ad was stupid. And under the covers, I was working for Oracle, and I saw how much database technology was being sold. And then I went to NetSuite that was using the database technology to put accounting into the cloud. Mm-hmm. At that time, all your accounting stuff was like locally held in the office. And
which who at that time thought someone was going to take all their financials and put it all.
This was what customers even said. I will never put my accounting data, that's the lifeblood of my business intelligence, into the internet. That's fucking bullshit and way too scary. I'll never do it. But behind the scenes, we saw people doing it. And I'll never forget, I saw that, but didn't get to kind of ride that wave because I didn't have 2 cents to rub together. So I didn't really get to invest in NetSuite. I worked there, but I saw that. And then 5 years after I already saw people going in, then the stock price and it starts to pump. So when I see Lightning Research reports saying, hey, the usage of the Bitcoin network on the Lightning network is really going up in these percentages, that gets my attention because I'm like, oh shit, sentiment is so bearish right now.
Yes.
That it's like, it is so reminding me of that era between like 2001 and I would say 2005. Where everybody was like, this is fucking a bullshit. And then Amazon just fucking rides like crazy. Facebook comes out and goes nuts. And there's like this next wave of tech adoption with the real players. And I have a sneaky suspicion, and please nobody bank on this. I don't have a crystal ball. Do your own due diligence. But I have a sneaky suspicion when you're seeing usage stats like this ride on top of Bitcoin and no one's really talking about it, there's this other wave that nobody sees.
Right.
Time will tell. If I'm 90 and it's whatever you said, then fucking, you know what? I'll buy you a fucking tequila.
All right. I can afford.
Yeah. Oh God. Oh my God. It's hard loving Bitcoin as much as you. I swear it's a hard thing. It's a hard thing. Hey, listen, when it pumps though, get ready because if it does pump, I'm going to be texting you.
I'm out. I cashed out. It's just my RESPs I left in. So
no, really?
Yeah, we had no choice, man. It's
okay. Well, that's a whole different situation.
You know what I mean?
Yeah. Okay. So anything back to the topic, real estate, anything else on using corporations, having your real estate in there, anything else that's obviously missed by people, maybe from an estate planning point of view, or like something that most people miss when it comes to real estate from a tax point of view?
I mean, no. Some people want to bring on their kids as shareholders, things like that. We don't even get into that because I have kids. You guys have kids.
But can you do that at like 18 or something?
You can, but they essentially have to buy into the fair value. Or you can do a freeze.
But they buy into the fair value of the equity in the property?
Yeah, or you would do a freeze and value the company and lock them into shares.
What if you borrow? Okay, so
it doesn't make sense. Why would you want your kids to own your properties? Why would you ever do that? I
don't know, to pass on assets to the next generation.
Yeah, but I believe Bill C-208 just came out and changed that over the last year. I'm not 100%
Don't act so smart with us.
No. That shit. Yeah, I can't because it's
C-3PO came out and did what? It's C-3PO
transferring of assets has become easier over the last year.
Really? I didn't know that.
Yeah, I have to look into it more. But I don't want my kids to own my assets. Because as my daughters get married,
Sure. Fair.
I don't want their spouse to own my properties.
Mm-hmm. Yeah, and that's a really valid point. I mean, I know I have a couple friends that their parents had assets and well off, and they made their kids sign prenups because they're like, hey, like we don't know what's going to happen, and they just didn't want their estate exposed to the spouse.
Yeah, but prenups they're see-through.
Are they really?
Yeah, people get prenups signed day of. at weddings. Like it's, if I get a prenup, if I married into a family that's worth $100 million and I had a prenup that I signed, I'm still going to go to a lawyer and try and get money. That's just the way this works. Right.
Oh. But so the prenup doesn't carry any weight?
I'm not a lawyer, but I'm saying anything is still challengeable.
Yeah, I got it.
Right?
I got it.
So you ask any lawyer that fights against prenups, I'm sure they have victories.
Okay. And so the only other thing I wanted to ask you about holding properties personally is, let's say you're in your 40s and you have your first single family home rental property. Some of the tax, maybe depreciation or I don't know, some of the expenses on the property could be used as a tax credit against your personal income. So in that situation, maybe it's good to have one property, get good insurance, get a lot of insurance on it. So you're covered. But maybe in that case, it's good from a tax point of view.
Okay. I'll answer this very easily. Do you have properties? Mm-hmm. Do you buy properties to lose money?
I think one property we actually were trying to make it lose money. But no, the answer is no.
You don't. So this is one of CRA's biggest attacks. So high income earners going and buying properties, putting them on personally and claiming losses.
Yeah. Depreciation.
Well, depreciation can only bring a property to zero. Mm-hmm. So and
then when you sell it, you got to pay.
Well, that's the recapture. Yeah. But I mean, if right now, most properties are actually losing if you're on variable.
Yeah.
All properties are pretty much losing. Mm-hmm. They're in the negatives. Mm-hmm. So we're not even taking CCA this year on most things. But if you're claiming losses on your properties, that just opens the door for CRA to come in and audit. So that is one of the CRA
so maybe
audits.
You could do it once or twice, but you're not going to do it for 10 years in a row.
Yeah. Out of there's 4 accounts. So if you're a corporation, there's HST.
Okay.
There's payroll. There's income tax. And then you have personal tax. Out of all of those, income tax, corporate income tax, is audited the least. In 20 years,
really?
I've seen one. The one.
That's interesting.
So you can actually,
you think they would get more money.
You know what though? Personal income tax is responsible for like half of Canada's revenues. So I guess that does make sense. Corporate is only 18%.
So if you have a property,
personal income tax, that's not sales tax or anything else.
Personal income tax, it makes up half of Canada's revenue. Yeah. It's a joke.
Yeah. If you have one property and you held that personally or corporately, let's say it lost $10,000, reported both ways. I guarantee you, audit through personal, corporate passed. They won't even look at it. I'm not even kidding.
Okay.
So in corporate,
we see quite the argument for.
We see that things get pushed through under the corporate tax.
Got it.
Much easier. And then if you have, most of our clients have their own businesses, so own properties in other corporations, loaning, investing with pre-tax dollars from your active companies just makes things so much easier.
Yeah, that's a good point. Okay, so any revenue you've earned from an active business, you're taking that money, buying real estate with pre-tax dollars in a business structure.
Exactly. And what's that the first $500,000 of net income? What's the first?
12 and a half.
Yeah.
That's beautiful. Actually, Canada doesn't sell that fact enough.
No, because when we tell people in the States that we like some of the Americans we know about that, they're like, what?
You can have a multi-million-dollar gross revenue business. I mean, I know I don't have to tell you this. Net income might be $400,000, and on that $400,000, you're paying 12.5%. Like, it's a good deal.
Yeah,
it's a great deal.
Cash. Leave it. Take out what you. That's what we do, right? So most of our clients take out what you need. Husband, wife. Wife has a corporation. She makes a couple $100,000. We only give her $40,000 out of the company. That becomes her RSP.
Yeah, makes sense.
Salary or dividends? You do salary?
I do dividends.
Dividend?
Again, because
taxed. Isn't the tax break even basically versus salary?
It is. It's actually right now. It changes every now and then depending on the dividend tax credits and the rates.
I feel like they always get their tax.
So right now, I believe it's more advantageous by 1% to go salary.
But if you go take dividends, then you don't get you still get old age security,
but you don't get
CPP, right?
Yeah. Yeah.
Or you get for maybe a small amount depending on how, when you worked and contributed to it versus when
I tell my clients, I don't want, when I'm retired, I'm going to get CPP and I'm going to have to give it right back. That's the way it's
going. Why are you going to have to give it back?
Because all the tax is just going to go right back to them. It's OAS, it's going to be the same clawback. They're just going to take back because you make too much money.
Because you're anticipating that you're going to have an income still, even income streams at that time.
Because of how we've invested, yes.
And when you said they take out 40,000 from the company, leave the rest in, that's their RRSP. That's not a lot to live on. The 40,000.
But a husband and wife,
so the husband's taking more, or the wife's taking. One spouse is taking more.
One spouse, might make $100,000.
Yeah.
The average.
So
family,
together they're taking 140.
Exactly.
Yeah. Okay. And if that's actually you're taking 40, because if that's after tax, the money that you're taking.
Yeah, it's like taking 80,000. I know I'm generalizing here.
And then we just have to play with, are they investing in real estate? Mm-hmm. Then it becomes, okay, how much do we have to declare? Because if that person's only taking 40, well, then the banks aren't lending to them.
So you'll work with them to take the right amount personally so they qualify for an upcoming mortgage.
Exactly. Or I'll just say right now, go to B lender.
Mm-hmm. They must appreciate them when you take that time to break it out like that for them.
But again, it's because I can do.
You're not a normal accountant. You're
I can count by because I can count by sevens.
3 times 7 is 28.
Yeah,
I get it, man.
This is just in the top of my head. Literally, I'll dissect a client in probably 5 minutes. Mm-hmm. So
when you say that, you mean you judge them?
Yeah.
I want to go back to this corporation thing with equity in the property. If you have a property with $500,000, and then you borrow against it, so you leverage against it. And with $500,000 of equity, you've now put a mortgage on it. So you take that equity out, you go cash into the corp. You decide to take that out. I know there's tax. I get all this. When the kid buys into the corp, if you want them to, there's not much, the value of that property, like there's not much equity.
Well, there is, because there is value in it.
Yeah, but is it just based on the difference between the market value and the mortgage on it?
Not the mortgage, the fair value. So it would be what you bought it for.
So it will be still what the corp bought it for?
Yeah, because there's still always going to be tax. Whether or not you mortgaged it up to the tits and took all the money, there's still going to be a tax.
Yeah. No, I was just wondering because the value of the corp is actually less if they're buying into the debt as well. That's what I was wondering.
Right.
We're going to look at the purchase value of the property.
It's a good gig, man. This government tax thing. It's a good gig.
Yeah. Anybody that can be self-employed and have a small corporation in Canada.
It's huge.
You are just outside their system.
Yeah,
RSPs are gone.
Yes.
Your original thinking, that is, it's now
almost
moving.
like everyone, whether they come out of school and get into a career, should start some side hustle business just for all of this stuff.
Completely. Well, just think for every $100 you make, you're keeping 87.5 versus keeping, depending on the tax bracket, but it would be, I guess, anywhere from 75 to.
And then if you're making more than 500,000 in net income, you're doing well enough at that point that, every dollar after 500,000 net income, if it's taxed at 26 or.
I think it goes to 36.
30.
Yeah. But again, that's when we start playing with tax.
Then there's other things you could be doing.
Yeah. Then we'll pay them a salary out of the company to bring it down.
You might have some properties and be able to use some tax efficiencies in that
the
way.
system is really great. If you fall into it, if you're just T4 employees,
tough.
It sucks.
It sucks just because I was trying to explain this to and I can't agree. It's close, but I can't.
Yeah.
It hurts me. But you're right. I was never told this, so that when in our line of thinking, go to school, get good job, then you realize you're T4. The banks love you because of the T4, but from a tax efficiency point of view, your hands are tied. The government's got you. You have no opportunity.
Yeah.
You're tax first. We have to withhold the tax. Shit, if we don't submit our payroll taxes immediately, so who's calling us? CRA or who is that calls us?
Yeah, I guess.
One time it happened, we just started up the business and we didn't realize payroll taxes had to be submitted 10. Holy shit, it was like the SWAT team was going to arrive we're a small little office in Burlington with 3 employees, and I thought the federal government SWAT team was going to arrive.
Yeah, on payroll tax, they're all over. The HST, they'll let you not submit.
I think it was that person left us and our mom was coming in to help and there was a 1-day gap there.
I don't know why. We've done it a couple of times where we've just kind of missed the deadline and, just whatever. This is over 12, 14 years. It was
2 or 3 scary, man.
And you asked, do I pay salaries or dividends? I do strategic things to get out of talking to CRA. HST, I'll go to quick method with most of my clients because it gets me out of an HST audit.
What's quick method?
Yeah.
If you are real estate agents, let's say they make $100,000. Long method is they collected $13,000 and then they would have ITCs for all of their expenses.
Sure.
You have to add those all up, the difference you give back. Or quick method, we just say you collected $113, including the HST, times 0.88%, give it to the government.
Who gave that calculation? They did? That's a quick
That's the quick method.
They actually published that multiplication
That's theirs,
factor?
Yeah.
Oh.
Accountants aren't allowed to use it because we're able to figure out the math on it.
3 times 7.
But then do you figure out if there's a delta or something at the end of the year?
Oh yeah.
Okay.
So this is, if for anybody,
there's no penalties or anything.
No, for anybody that has, you have to elect into this method. So for anyone that isn't doing staging or have big costs, most realtors don't have expenses. Mm-hmm. Most consultants don't have expenses. So that method works for them, and they'll probably save about $4 or $5 grand in most cases by selecting that, and we get out of the HST
because you audit. Don't have to true up if you accept quick method, whatever that math.
Because whenever they audit you, they always audit you for the ITCs. I want to see the HST that you spent.
Got it. And if
we're not claiming it. Yeah.
Okay. There's no ITCs, so it doesn't matter.
Yeah. What about professional corps? So doctors, dentists, I know realtors now can set that up, but they're getting the benefit of the small business tax credit as well.
Yep.
Right. Yeah, that's a real advantage in some professions if you're able to do that, or people that are doing consultants and stuff like that.
Huge, yeah.
So now you've done a lot of shit like real estate, your own business, commercial real estate. If anyone listening, what would you pass on to the younger JP about entrepreneurship in general, from maybe a mindset that you need to have because entrepreneurship to me, which is what you've gone through,
right,
is fucking holding on for the ride. Like you need to survive, right? Ups and downs. Is there something that comes to mind that you would tell the younger JP or a younger person? We just talked about how great corps are.
Yeah.
But corps usually mean you're going down the road of being an entrepreneur in some capacity. So what's the flip side that you would tell people to? You
got to be hungry. You can't teach that. I remember one of the sayings that you always told me, Nick, was, fat dog don't hunt. And I became fat. Both.
That was a guy at a mastermind meeting who told us that.
Told you guys, I went through that.
He said it with a Louisiana accent.
And with a leather hat with teeth in it.
Yeah, it was awesome. Fat dog don't hunt.
Yeah, and he leaned back as he said it. And I looked over and go, fuck.
But it was so good. It was so impactful.
Yeah. Like I have thought that saying so much, and it's battled me because, but I'm exhausted, and then I'll get energy, and then I'm exhausted, and we've gone through it, and I always say, what would I do going back?
Yeah.
You would have to team up, you would have to team up to make a move in this real estate. I think anybody who's in their mid-20s, living at home, I wouldn't be able to afford a house. I would be teaming up with people.
That's what Anthony did in our office. He's
teamed up. He's in his 20s.
You have no choice. Get in, because if you don't get in, who cares? I was talking to someone on my volleyball team. She's in her mid-20s, 24. She has a boyfriend. Buy a house. Who cares?
Yeah,
it's an investment. If you guys break up, you still have an investment. You guys just go into it initially saying, okay, if we split, we sell.
Yeah, Noha did it too. She's in her.
And to be clear, I think the investment angle of it is the fact that you can put 20% down and you get the leverage.
You can put 5% down.
Sure. Okay. First time home buyer put 5. So it's really the leverage component of real estate. It's not like real estate's this holy grail. It's the fact that it's one of the few things the average person can get into where the banks will lend them against, so they can use leverage to outpace monetary debasement.
And they're getting priced at if I was starting out, I would be so priced out. It's not even funny.
Same with us. My first 4-bedroom home was $268,000. Right. Mad at me, 2-car garage, 4-bedroom, and I thought I was getting ripped off.
Yeah.
I still think about those in Mississauga. There's those raised bungalows. I still think about these types of properties. A lot of them are
because they're beautiful. They're on like 75-foot lots.
No, I'm talking the ones that are semis.
Oh, those, semis, yeah.
And there's one double driveway in the middle.
Yes.
Right. And I know
with the doors at the bottom.
Yeah, with the doors. So you just the driveway at the bottom, and then there's steps up to the next floor. And I'm just thinking like that.
As a real estate investor, that's the
But if you're starting out, or you're with girlfriend, boyfriend, whatever, a partner, and you guys are starting out, like you do that, you can live in one level, and then you just rent out that other level, and that gives you that extra income from renting out one level. It gives you a foot in the door. And if you were going to go rent a condo, or you were going to just rent an apartment or a basement unit or something for yourself, you might be able to squeeze into one of those, and then you get the ownership of the asset and start kind of building it that way.
Yeah, I think
I always think about, I love those
you would say
properties. Those are my
partner
favorite
up.
ones.
And I
ever.
do feel lucky that Nick and I are brothers to be partners, just because that's worked out for us, because you said as an entrepreneur, you get exhausted, which is true.
Yep.
And sometimes when I'm exhausted, he'll be like, oh, fuck, let's do this. So we kind of carry each other.
Yep.
And that has been a real advantage. And being family members, we trust each other when it comes to money and stuff like that.
Right.
So it's just...
Yeah, there's never had to be, that's been like something I guess I took for granted.
It's been a positive, that we probably discounted when we first started.
without a doubt.
Yeah.
Especially the trust factor, because I talked to some other entrepreneurs with different business owners, and then they've had financial issues with them when people have taken things or
Right.
and I'm just like, oh wow, that doesn't even
Yeah.
not even having to think about that. It's nice because it frees those mental cycles that you don't have that in the back of your head. You don't even have to think about it. You just worry about other stuff, right?
Yeah. Yeah. But we had side hustles throughout. I was 24, 27. I've always multiple jobs.
Well, you still have side hustles if you look at it, because you have your
Without a doubt.
accounting practice, you're doing in real estate investing. You're like everyone, like that seems to be the way.
You need the side hustle.
Well, you can't be dependent on one thing in any avenue of your life, except for marriage. If my wife's listening, she's actually right back there. So except for, I'll open the door and we'll say it loudly. Yeah. But you don't want to be dependent on one thing. You want to try to build different,
especially in today's world. JP, 2 Saturdays ago, we had Jeff Booth speak at our event. And he put up some robots that are basic, like humanoid level now, like especially with the dexterity of their fingers and stuff, like they can now finally pick up small screws and objects and stuff like that. And then somebody who is a longtime client of Rockstar, who kind of works in that industry, just sent us that email saying, look at all the robotic stuff that's kind of happening. And one of the machines is flipping the French fries. And it's not the future anymore. Like this is now going into restaurants. And I'm like, holy shit, if you don't have multiple side hustles going forward, you can't even predict what the job market looks like 5 years from now, because some of these robots are going to take some of those entry-level jobs that everybody accepted as the path into making an income. And you need to be flexible. And this is where with your daughters and our kid and everyone, it's like, what do you even tell them anymore? The only thing you could tell them is 3 times 7 is 28. That's the only thing you can tell them.
Right. I'm sure our kids are privileged. So
yeah, they're fortunate, but I look at some of the headwinds that are facing them just in the economy. And honestly, when it comes to the amount of debt like one thing that freaks me out is that if you go to the Institute of International Finance, I tried to sign up Rockstar for an account there. It's basically where all the bankers hang out. And I signed up Rockstar. I'm like, Rockstar Real Estate, we would like to get the reports, please. And we got denied. But every once in a while, if you go in Google searches and you search Institute of International Finance, global debt, one of their reports that they put out behind a paywall will get out onto Google Images. And you can capture it. So one of their latest ones shows that there's about $400 trillion of global debt. If you add everybody's debt up, and GDP is just under, globally is like 100 trillion, it's actually at less. It's like 360 trillion in debt and like 80 trillion. The ratio is like 4-to-1 of debt to global GDP. And when you look at that just from a math point of view, and you being a math guy, you're like, well, fuck. If they grow the 4 at 5.5%, if that debt grows and it's 4 times bigger than the GDP, well, the GDP better get a shit ton of productivity gains, or the inflation required to bring the GDP artificially up is absolutely insane.
Right. So we need to buy more, but we can't buy more because inflation's too high.
More what?
Buy more things to get global economy up.
Correct.
So the way the system is broke.
So the way they're going to solve it is stuff more dollars, which then robs everybody's savings. I was at the store. Oh my gosh, you're not going to believe this. We were up at Collingwood. My sister-in-law has a really happy announcement to make. We're congratulating her, my brother-in-law as well. And I decided it's a good time to buy some dark chocolate. So I go to the place in Blue Mountain, and it's an expensive little chocolate store to begin with, but this still shocked me. I go in, I buy 3 pieces of dark chocolate almond bark. They're like little triangles, like size of less than my hand, 3 pieces. Okay. And then I get 4 Halloween truffles. So they did have decorations on it. You know what the price was?
Yeah, probably $50.
$50? Okay.
Yeah.
Yes. No, seriously.
$35.
$63. Fucking almost had a heart attack. And I'm looking around, I was so embarrassed that I paid, like, when you're so embarrassed that like you still pay, but you're like, I'm the moron.
Yeah.
Like, and I paid and I walked out like with the tail between my legs. I go, oh my, I just paid 63. I look in the bag. I go, did the guy put a piece of gold in there? Like, is there some Bitcoin in my bag?
I've never looked at receipts the way I am now.
Same.
Like last night, Subway sandwiches. I got 2 subs for my daughters, 2 chocolate milks, and 2 small bags of chips. $36.
No.
30. I remember eating this like 10 years ago in university.
$4.99 combo or something,
right?
The last time I had, there's 2 things. When I went with the family to Chipotle, it was 4 of us. One was a kid's meal, and then 3 just burrito bowls or whatever. 1 burrito, 2 bowls, right? And it was $76. I think we had 2 drinks, not even 4 drinks, because we're taking out to go. I'm like, I don't want one. It was 70, and I'm like, this is like a family. This is fast food.
I was at Chipotle with a family, a mom and a son who clearly had never been to Chipotle before, and they asked for the son to get more meat on the Chipotle bowl. Then she gets to the checkout. I felt so bad. They put up the price for the Chipotle bowl with the extra meat, like it's really expensive. She starts freaking out. She goes, "Why are you charging me that much? The price is that." And they said, "Well, you asked for the extra meat." And she's like, "I'm paying that much for that little bit of extra meat." She starts pointing. Yeah. She was furious.
And it's not even real meat.
Yeah, well, hopefully. You're right. Maybe at Chipotle, it's actually real meat. But one last example, a buddy of mine goes and gets, he's having some people over. He gets 60 thin slices of prosciutto. You know, prosciutto's super thin at the grocery store. $45.
Wow.
We used to get that like $12, you know, if that. So, anyway.
It's gone.
Things have been.
It's gone out of control.
But my point on that 4-to-1 debt ratio is if we don't get the productivity gains because we can't make and buy more things because of what you just said.
But the productivity, this is where things in my head, I'm just like, well, the productivity gains with technology and robotics are coming.
Could save the day, but that transition is like, it's really like 5 to 10 years away. We have this problem right now.
But then we need other things for people to be doing, which I think are going to exist. But then there has to be, like you said, this transition from people from what they're doing now to be productive in another capacity, because overall we should get more productivity because of the robotics technology. Correct. So we should get those gains. But the transition from the people losing those jobs into something else is really.
And on top of this, the federal government's revenue, we just said, is half from personal income taxes. Is if a whole bunch of jobs go away. What now? They're going to start taxing robots?
Yeah. Every hour that a robot runs, there's going to be.
So JP is going to have to do tax filings and ask people, "Hey, how many fucking robots do you have in there?"
Yeah.
No, but I'm not even joking. I'm not even joking.
Yeah. How many? But
what are you talking about? That's already in place. There's going to be, because there's the carbon tax. So as the robots come in and use more electricity, they should pay more carbon tax, and they change the structure of the carbon tax. They're going to do that 100%. Yeah. Like something like that's coming. I mean,
the system. I don't think prices would come down.
No, right? I mean, for prices to come down, the whole system starts collapsing.
It can't come down. Otherwise, GDP shrinks. And when you have 4-to-1, you can't have it come down.
Prices can't come down. So how are interest rates going to come down?
This is exactly what Jeff Booth talks about, that you have an environment with productivity that prices should come down as things get cheaper to make. But we have a monetary system that must increase because it's debt-based. Yeah. So you have 2 gigantic forces batting each other at the head. And this is why, JP, Bitcoin wins.
Interest rates can still come down. It just depends on where inflation is. So if inflation drops off, even if it stays at 4%, interest rates can still come down to 3%. They need negative real rates because that's what they need because of the GDP.
They do negative real rates, financial repression on everybody for 5 years, but they could do it good. Bring up inflation to 20%, bring rates up to 15%. Oh no, 10%. Do 20% inflation. That's negative 10% a year.
Everyone suffers for a number of time.
Nominally, GDP will grow at 20% inflation. Nominally, GDP will grow even at high rates with that type of inflation.
Well, in Argentina, who were we talking? Someone was in Argentina, and we were talking to them. When they were there, they were talking to people, and they're like, "Hey, everyone's out there spending money." Like the people are out there and
restaurants are busy,
and they're like, well, yeah, because our money we know is going to be worth so, like, we can't keep it for a month or 2 months because it drops in value so fast. So we're just out there spending it. So like the economy still lives.
They're living, and
life still goes on.
Yeah.
Right?
Oh my gosh. Yeah.
People are hurting though. My clients, like
everybody's hurting.
Oh gosh. Yeah.
Right now in Canada, everybody's hurting.
Yeah.
And you have a front row seat to it.
I do. I get to see kind of, and like offering terms like, it's bad. It's a different,
But I mean, anyone listening, just so you know, we went through really bad times in the 90s as a family. And I can tell you, you come out of it. You just have to survive. Don't try to get too ego driven and brave. If you have to sell something to survive and raise some liquidity, even if you love the asset that you need to sell, sometimes you have to sell.
Yeah, we've liquidated stuff. That's
how
part
you
of the beast.
live. That's how you survive. Like, survive to play the game. Don't be so ego driven that you don't raise enough liquidity when you need it.
Yeah.
Act early.
And if anyone wants to buy an office space, let me know.
Yeah, Burlington office space. Reach out to JP. And
now's a good time. It's really
It's been a year. It's been over a year now. So it's nothing is moving. What about real estate for you guys? Is it moving or?
It's moving. It's slower, but it is moving.
There's different properties. There's investment. I mean, there are. I mean, I know you said before there's properties that don't cash flow. There's still a lot of properties that do cash flow, but they're, like people are. It's multiple unit ones, right? Or student properties.
rentals.
There's so there are different properties. But the single family home, when people are putting the minimum amount of down payment and they're getting a mortgage at whatever 6.5% and stuff. Yeah, those ones are
the whole reason that we always kind of focused on the starter home market, whether it was a student rental or a duplex or a single family home, is that when shit hits the fan, those are still the properties. If you need to unload, you can.
Right.
Whereas some of the other categories, as we all know, gets a little tougher.
Yep.
So that's kind of why we've always, and people may have made fun of us, JP, just so you know, they're like, why aren't you guys doing this and that? We're like, because we saw in the 90s, the starter home, it's not perfect because prices can still fluctuate wildly, but if you need to sell it, you can still, it is, to me, the most liquid piece of real estate, if we can call real estate liquid, which I know is maybe a stretch.
You could have a year ago.
Yeah. But even a starter home today, those are if you take the luxury market, industrial, commercial, whatever, the starter residential is still the category that's moving the most.
Right.
But JP, who's your ideal client? Like, can you just map it out? Who do you like working with right now? And who?
Pretty much we're helping everyone. So it's,
so individuals and people with small businesses, entrepreneurs.
If you're big, then I don't want you.
And how would you define big? Like somebody who owns a medium-sized
pretty
business?
matter of fact.
So like,
I just can't service you. It's
So you serve accounting needs of individuals and small business owners. Would that be the best way?
Exactly. Yeah. Okay. Small business. But if you're looking at family trust, things like that, it's just outside of my wheelhouse.
Okay.
Small is where we go.
That's cool. So you know where you are good, and that's what
that took a very long time.
I know.
It's that figuring that model out but that's what we have. And
so the individual,
and
a small business owner is your client.
Yep.
And the best place to find you, I guess the URL,
JP. My URL, JPM. I don't even know.
JPM. Well, this is great. Okay. JPM. Maybe we'll just say 3 times 7 equals 28. And if you Google that up on the internet,
3 times 7
I don't look,
.com.
I don't look at my.
You should get 3 times 7 equals 28.com. I know math. Okay, we'll link to it. JP, we'll link to it.
Yeah,
I'll say it in the outro.
JPMPartners.ca.
JPMPartners.ca?
Yeah.
Okay.
I don't go on my website.
.ca. So that's where is there a way to reach you from that website?
Yeah, they can call me. They can.
JPMPartners.ca.
Yeah.
Dude, thank you for doing this.
Thanks for having me.
Pleasure chatting. We'll have to talk about Bitcoin when you come back next time.
Yeah. Okay? Thanks, guys.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.